Good morning. It's Monday, the 4th of November, and this is Govindraj Ethiraj, headquartered and broadcasting as well as streaming from Mumbai, India's financial capital. The take on this fine November morning. Walking around G Capital's offices in Gurgaon in the late 1990s, it would have been tough to imagine that these hundreds of young executives who I saw working night shifts could be building the foundation of what would become one of the most powerful and unbreakable economic links between two countries, in this case, India and the United States. Senior GE executives like Pramod, Bhasin and Raman, often called the father of India's BPO industry, more than 25 years ago thus built or created the architecture for an industry that progressively employed millions, even as it integrated real-time with businesses in the United States and elsewhere in the Western world. G Capital was then owned by General Electric but has subsequently been sold off. Now, artificial intelligence may take over many of those jobs that I saw 2 decades ago, but the early BPO revolution has since given way to the Global Capability Center wave or GCC wave. Today, there are over 1,700 GCCs in India or captive centers for large multinationals, many again in the United States. And there are almost 2 new ones being set up every day. Corporations like Nvidia, whose founder CEO Jensen Huang got a rockstar reception during his India visit 2 weeks ago, first set up his development center in Bangalore more than 20 years ago, as did Intel, General Electric, Cisco, Google, Meta, Oracle, and a host of other technology and non-technology companies expanding to Hyderabad, Chennai, and Delhi. Even Apple's exports of iPhones from and made in India have now jumped by almost 30% in the last 6 months, with exports touching $6 billion in this period, putting annual exports on track for about $10 billion. On both products and services, India and the United States of America are tightly linked like never before. Which brings us to the elections in the United States this week and what it could mean for India. The one thing about a tight race is that neither side's agenda is absolute or will remain so. Current President Joe Biden did not really alter his predecessor Donald Trump's China policies, and if anything, over time only further tightened controls on Chinese imports and trade. Similarly, while the Biden administration may have been lax on immigration, particularly illegal immigration in the last 4 years, the next 4 will see much tightening, whether it's Donald Trump or Kamala Harris who becomes president, because this is an issue that is clearly resonating with voters. Indian companies exporting to the United States could be, in the worst case, see tariffs on products, maybe 10%, and clampdowns on H-1B visas and the like. But the larger point is this: the United States is on an unprecedented economic growth path right now. So much so that the IMF in July revised upwards its GDP growth projection from 2.6 to 2.8%. The previous decades saw less than 2% average growth, incidentally, in the United States, that is. The Economist in its October 19th edition points out that residents of America's poorest state of Mississippi on an average earn more than the British, Canadians, or Germans. It also said that those who thought that China would have overtaken America by now as the world's largest economy at current exchange rates have been proved wrong. China's GDP was around 75% of the United States in 2021 and is now 65%. All this may change later, but this is how it stacks up right now. America, by the way, is the largest producer of oil and gas in the world too. China is only the largest importer of crude oil, followed by India. The Economist says that an economy with an unemployment rate of 4% and a per-person GDP of $85,000 does not have to be made great again. It is great. India, like many other countries, will benefit from a strong US economy that is, of course, open to trade. Remember, US stock markets, which, by the way, are pricing in a Donald Trump win, are also on an unstoppable bull run with all indices at record highs. Global markets tend to keep pace with Wall Street, even if there are lags and bumps. Despite Mr. Trump's exhortations of tariffs, it's difficult to believe that tariffs, even if imposed on countries like India, will be prohibitive. China might be a different story, of course. And while more H-1B visas might be tough, that will not fundamentally alter the power balance, at least in the context of Indian IT services companies. The bottom line is that the Indian and US economies, going back several decades, are very tightly interlinked, and the process that began decades ago is only getting stronger, even as America's biggest and most successful corporations tap into both the talent and the market that India offers. For the United States, under any president, good economics will sooner or later make for good politics as well. And that brings us to the top stories and themes. The markets recover in a special trading session on Friday, all eyes on US elections. Oil prices rise on speculation that Iran might retaliate against Israel. Berkshire has moved to record cash levels at $325 billion, what that could mean. Nvidia to replace Intel on the Dow Jones Index. And finally, Bibek Debroy's unfinished agenda through the eyes of a fellow economist and co-author of multiple books.
This is the Core Report with Govindraj Ethiraj.
Will the markets hold Diwali gains? A special Muhurat trading session for Diwali on Friday last week brought some cheer into the markets, which have otherwise seen a terrible October, being the worst month actually since March 2020 or COVID time. October also saw foreign institutional investors sell over $11 billion of stock as they shifted out and mostly to China. In Friday's trade, the Sensex closed 375 points up at 79,724, while the Nifty closed up 99 points to 24,304. Since 2023 Diwali, the Nifty has risen about 25%. Gold has, of course, done well. High prices have kept volumes a little low in the festive season, but prices have hit a record high of about 79,775 rupees per 10 grams earlier last week, marking a nearly 33% increase since last year's Diwali. So there you are between Nifty and gold. Gold has clearly done well. Oil prices rise again. Oil prices have firmed up once again, only marginally though, over the weekend on reports that Iran may attack Israel from Iraqi territory in coming days. Brent crude rose very marginally to hover around $73 a barrel, but was down about 3.2% last week following Israel's limited attack on Iran over the weekend. Bloomberg reported, adding some analysts were now warning that the market had relaxed too quickly. The new tech titans. Now, this must hurt, getting edged out of a key index, but only to make way for your rival. Nvidia Corporation, the chipmaker that's powering the artificial intelligence boom, is joining the oldest of Wall Street's three main equity benchmarks, Bloomberg is reporting, adding that Nvidia will replace rival Intel in the 128-year-old Dow Jones Industrial Average prior to start of trading on November 8th, that's this week. Sherwin-Williams, the paint company, is also joining the index, replacing Dow Inc. amongst the largest chemical companies in the world. Sherwin-Williams is seen as a surprise addition and is also present in India, by the way, or rather the Indian paints market, though more in the industrial and coating space. The Nvidia stock has risen about 900% in the past 24 months and ended last week with a market value of $3.3 trillion, about $50 billion short of Apple Inc. Intel joined the Dow Jones in November 1999, so it's been a 25-year journey when it was added along with Microsoft Corp, SBC Communications, and Home Depot. Struggling Intel shares have lost about 54% this year. Some history: the Dow Jones Industrial Average started as an index of 12 industrial stocks that included, by the way, General Electric Company, whose then subsidiary GE Capital brought business process outsourcing into India, something we just spoke of. Dow Jones has 30 stocks, usually a mix of shares from technology, finance, healthcare, and consumer. A committee selects those 30 components and weights them by price rather than market capitalization, as opposed to the Standard & Poor's 500. Bloomberg reported that the Dow's influence has faded over the years as passive managers linked to benchmarks based on market value, and the index remains an exclusive club and still serves as one of the highest profile showcases of American industrial power. What does all that cash mean? When mutual funds or long-term investors increase their cash reserves by selling stock they're holding, that's usually a sign that there is inherent overvaluation in some stocks or in the overall market. Now, the reason for selling could also be specific to a company's fortunes, but that may not be the case here. Berkshire Hathaway's cash pile reached about $325 billion in the third quarter, a record for the conglomerate, Bloomberg reported, saying that Warren Buffett was continuing to refrain from major acquisitions even as he was trimming some of his most significant equity stakes. Berkshire has once again cut its holdings in Apple Inc., with its stake valued at about $69 billion at the end of the quarter, down from about $84 billion in the previous quarter, indicating that it cut its stake by about 25%. Buffett said in May that Apple would likely remain Berkshire's top holding, indicating that tax issues had motivated the sale. Berkshire has struggled to find ways to deploy its cash as Buffett has found market prices too high to find attractive deals. At the annual meeting, Buffett said that Berkshire wasn't in a rush to spend unless they thought they were doing something that has very little risk and can make us a lot of money. Indian equity funds' allocation of cash relative to asset size rose to their 5-year high at the end of August, as fund managers at that time were worried about markets being too rich and other macroeconomic risks. This was as per a report by Reuters in the last week of September. The report quoted Morningstar data and said that active equity funds in India with a fund value of at least $1 billion held an average of about 5.4% of their portfolios in cash as of end August, but that was the highest level in 5 years. Some funds held more, like the ICICI Prudential Value Discovery Fund, whose cash allocation rose to about 15% by the end of August from about 7% at the beginning of the year. Now, there were a few others, and the situation may not have changed much since, but it would also be logical that if the markets correct between 7 and 10% from peak, it's already 7% by the way, then funds would start bargain hunting more aggressively. But then on the other hand, Indian mutual funds continue to see unprecedented flows of money. So things are a little different. Coping with slowing demand. India's urban middle class has slowed down spending for at least the second straight quarter as inflation and unemployment weigh on sentiment, according to Bloomberg reporting over the weekend. At least 7 of India's largest companies, including Reliance Industries and its retail arm, Hindustan Unilever, have flagged softer consumption demand and a challenging operating environment in their earnings for the July to September quarter that have been rolling in. The reasons range from a fizzling out of post-pandemic euphoria, higher interest rate, muted wage growth, and poor job prospects. On the other hand, rural India is showing signs of spending thanks, of course, to a good monsoon season that's boosted incomes, but that may not be able to make up for the pullback from nearly 500 million city dwellers, according to Bloomberg. Maruti Suzuki chairman R.C. Bhargav said the cause of concern was that the growth was only taking place in certain segments, presumably referring to the more premium segments. According to him, what used to be 80% of the market is not growing, referring to the entry-level small cars whose sales is usually seen as a gauge of urban consumer demand, but that, as our own conversations with dealers have told us or indicated over the last 6 or 7 months, had been slowing down. Small cars made up for as much as 80% of Maruti's sales as recently as 5 years ago, according to R.C. Bhargava. Bloomberg said that revenue from operations for Reliance's retail unit, which is also the largest retailer in the country, slipped by about 3.5% for the last quarter, which it attributed to weak demand for fashion and lifestyle products. So the larger point is that a revival of rural demand, which will happen, cannot offset the shortfall in urban mass spending. Unilever, for example, says that smaller towns and villages make up only a third of or 30% of its sales. They also said that any recovery in demand growth was a few quarters away. At a macro level, investment banks like Goldman Sachs have already downgraded India's growth projections to 6.5% for this year. At the retail end, latest data from credit information firm TransUnion CIBIL shows credit card delinquencies increased by about 17% as of June from a year ago. So the final bets now are on sales numbers from the festival season that is going on, or rather just about ending, and to what extent the bump up that we will see will negate the slowdown that we saw in previous months. So watch this space. India loses an economist philosopher. Dr. Bibek Debroy, who died last week, has been called a philosopher-economist and is remembered for a variety of things, but principal amongst them is being a free market economist who spoke up against controls and shortages. Dr. Debroy was chairman of the Prime Minister's Economic Advisory Council, and he passed away on Friday last week at the age of 69. He worked with many things, including a blueprint for transforming Indian railways, indeed wrote columns on the railways like a true railway buff, and even taught chess to school children in Delhi over the weekends. He also had a sporty pursuit of sorts, which not many knew about, and more on that shortly. He argued for the simplification of laws, including in states, and jettisoning old laws, and of course taxing rich farmers. In one conversation I had with him several years ago, he spoke in passing of some books he was reading and possibly working on translations. "That's a lot of reading and writing," I said to him. "Yes," he responded, saying that the books were actually in Russian. I almost fell out of my chair. I discovered later that he was self-taught and fluent in both Russian and Sanskrit. He won equal acclaim for his work in translating Indian scriptures like the unabridged Mahabharata into English in 10 volumes, the Ramayana in 3 volumes, followed by other scriptures. Back to Dr. Debroy, the economist, I caught up with Dr. Amir Ullah Khan, a former civil servant and development economist and now research director of the Center for Development Policy and Practice based out of Hyderabad. Dr. Khan teaches at various leading institutions, including the Indian School of Business, and has also worked on the Encyclopedia Britannica and co-edited 2 books with Dr. Bibek Debroy titled Enabling Agricultural Markets for the Small Indian Farmer and another one called Integrating the Rural Poor into Markets. He also co-wrote a book with Dr. Bibek Debroy called Intellectual Property Rights Beyond 2005. I began by asking Dr. Khan what were the 2 or 3 major economic issues that Dr. Debroy was passionate about from his vantage point, that is, and that also deserved further discussion, attention, and pursuit.
Govinda, very clearly there are 3 of them. The first and the one that was his big favorite was legal reform. Vivek spent a major part of his life arguing for, and it is very contemporary in today's context when we are discussing the judiciary so much. Vivek's constant worry was that India's industry and India's rule of law atmosphere is so dependent on judicial reforms. And therefore, he was very keen that the judicial process be shorter, be more efficient, judicial appointments be done with due care, and that access to justice becomes universal and easy. So that was his first agenda. And there is a lot that we still need to do. And I don't think I need to emphasize that. And, toward even till the end, Vivek repeated and underlined that worry of his. The second, very clearly, developing markets for agriculture. That was the work that I did with Vivek repeatedly. There, his worry was that it is indeed the farmer who is vulnerable because of price fluctuations, because of price discovery, and simply because the market system at that level is broken. So he argued consistently for major reforms for agriculture and agriculture procurement. The third issue that Vivek was very interested in and really tried his best to ensure that the Indian economy goes to the next level was that Vivek understanding of how important it was to foster competition. And again, he was among the earliest people who worked on the then MRTC, and I was fortunate to work with him on that. And while the monopolies regime that existed got dismantled, and to a large extent because of Vivek's push and logic and his articulation, but even now, and again, this is something that I need not explain to this audience. There is again this fear of competition being curbed, to put it kindly, and therefore it was important for him that we have absolutely free and fair competition. So to put it in synopsis, it is legal reforms, it is agriculture reforms, and it is the reforms in terms of competition. The ability to have a completely free and fair market with free exit and free entry.
Right. So to pick up on free market, I mean, that's something that he was known for. And I think what you pointed out is in a general sense. Are there any specific manifestations that you feel we need to still work on, given what he had envisioned as a free market? I mean, is India heading in that direction today?
Vivek emphasized and used the example of land rights to show how markets in India are flawed. He spoke about it, he wrote on this copiously, arguing that till we get our titling right, and there is a very brilliant paper and a column of his, I worked with him on how, one could take a leaf from, say, markets like Australia, which had, just overnight cleared the land titling issue. The big problem in India, apart from, infrastructure and so on, is land. We have really high prices of land today, artificially so. And the big reason for that is that land titles are not clear. Because land titles are not clear, it leads to litigation and it takes away a lot of tradable land from the market. And therefore, even in a city like Delhi, the amount of land available for transactions is but a third of the total land that is available. And that is why you have land prices which rival Tokyo and London. I just wanted to use that to emphasize the clear manner in which Vivek would argue for institutionalizing the market by ensuring that titles are clear. His thought process was very algorithmic in that sense. That look, we start with price, with titling. If the title is clear, then half the transaction costs are reduced. Once the titling is clear, then the law also it doesn't become a burden and doesn't become a bottleneck. And therefore, it goes on to the next issue, and the transaction becomes easy, and then the financial system takes over, and then taxes and so on. But he was emphasizing that it is the titling and the fuzziness of the titling that leads to the maximum amount of delay and the increase in transaction cost as far as land deals are concerned.
And I know, I mean, when we talk about agriculture and agriculture and farm labor, I mean, that's a very broad issue. You have any sense on what his contemporary thoughts were on, I mean, we talk a lot about migration of labor from farm to city, and we've seen the reverse of that now to some extent. So, how would his thoughts, or what would he be, or perhaps if you knew what he was thinking, or if he was on these issues at this point?
Oh, he was very clear and very consistent on this issue. For him, it was very important that farm produce be sold without any barriers, not just across the country, but across the world. And he was among the early proponents of the agreement on agriculture and how it needed to be broadened under the WTO to allow for freer access to agriculture markets, which he argued would be beneficial to countries like India. On the farm labor, again, it was the same consistent thought. Bibek said that farm labor can only fetch higher wages when it is absolutely and clearly mobile. Whenever there are these barriers to farm labor mobility, that is what would upset Vivek a lot. And that is what is happening, unfortunately, in our country, because there is very little labor mobility across states. While there is migration that happens within states, across states, we don't see too much labor mobility happening. There is some migration happening in the IT and whatever sectors, but labor mobility, or manual labor or agriculture labor, is still very, very slow, and it's because of a variety of factors, not the least of whom being, reservations for jobs at local levels and state-wise differentiation among labor and linguistic barriers. So for him, farm produce had to be freely tradable and farm labor had to be free to be mobile.
In your sense, was he benchmarking India against something? Did he have like a vision which said that, okay, I hope that India will become like this? I think you've already broken down some of it. You've said, okay, if we free up land titles, if we make agricultural labor or farm labor more mobile, then obviously those will have larger economic benefits. But is there something that he had like I don't know, his idea of a developed country or something like that?
Yeah, Bibek was not one of those who would use inter-country comparisons easily, because he did believe that, countries have their own paths to take and must understand and comprehend local issues and produce solutions that are indigenous. But if I must answer your question, his answer would have been the European Union, that he wanted India that was more like the European Union prior to the Brexit complications, where there was absolute mobility of labor and absolute mobility of produce by way of uniform tariffs, uniform and low tariff. On low tariffs, he had constantly argued that India should emulate East Asia and Southeast Asia, where tariffs were at a low, and intra-regional bloc trade under ASEAN had grown tremendously during the time that Vivek was studying that trade. So the two examples that he would use would certainly have been European Union and ASEAN.
He had many diverse talents. I mean, much has been spoken and written about his work on the Mahabharata and the Ramayana. How would he find the time to do all this? I mean, to think about economic policy on one hand, scriptures on the other. I mean, did you know how he divided his day?
Yeah, I spent a lot of time in it. But just to answer a question you did not ask me, which was that of the multiple things that he did, and justifiably so, people are talking about his prodigious translations. But one thing that everybody is missing on, and which I am privy to, was his absolute fascination with cycling. I mean, he and we did a Delhi cycle race with the PhD Chamber of Commerce, and he was so passionate about it. He would come to the stadium at 4 in the morning and be with us. He wouldn't cycle himself. He actually wrote out this brilliant piece on cycling and how it developed. And the secret to Bibek Debroy's multitasking of that level was his absolute levels of focus and concentration. So, he could be talking about dog breeds for 10 minutes or writing about them. And in those 10 minutes, the rest of the world didn't matter to him. But when he would switched from there to talking about patenting, which was the other book that I wrote with him on intellectual property rights in India when they were developing, then he would only be talking about why, compulsory licensing is not a good thing for pharma sector. So he had this amazing ability to work on 10 things, but allot them specific individual time where he would not think about the other. And it would allow him to focus his rather remarkable mind and memory on that one particular problem for those 10 minutes. So that way, Vivek always had time for everything. You could take him out for dinner, you could ask him to come and watch a cricket match. I remember that time when he had to go to the hospital. He was having a heart attack. And his worry was that will Tendulkar complete his century? Wanted to watch those last 6 runs. And we literally had to drag him to feel a determined sense of focused concentration on what he was doing at the moment.
Amir, thank you so much for joining me.
Thanks so much, Rohit. Lovely.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.